Is the tax system rigged for the rich?
It is rigged for the rich. Yes, it is. Absolutely. If you're wealthy, you have more options. And I think if you're lower income, you have less options. And most people that are lower to middle class typically are working for somebody. So they're limited on the amount of deductions they can take. As you approach business income, you increase your wealth, you start to qualify for deductions, exemptions, and tax credits that can offset your tax bill.
Is this ever meant to be something that's fair? Or is this just the way it is? Because I look at this in one sense,
Yeah.
like rich people get these huge advantages that everyone else doesn't get access to. So if you're self-employed and you
Yeah.
make $1 million a year, the options to reduce your income are limitless, essentially.
Yes, that's correct.
But on the other side, you have, I think it's like the top 50% of taxpayers pay 97% of all the taxes.
Yeah.
So they're the ones paying the most into it. So it makes sense that they get the most out of it dollar for dollar.
Yeah. The middle class pay the highest tax rates, bro. And the top earners pay the least amount of taxes possible. But you have to realize that the top earners are spending the most amount of money, and they're doing what the government wants them to do. They're investing in oil and gas, they're investing in renewable energy, and they're investing into rental real estate, providing affordable housing.
Mm-hmm.
So they get the massive amounts of tax credits and paper losses that offsets their active forms of income.
So how much of the incentives, credits, deductions, et cetera, that the government offers these wealthy entrepreneurs and business people is because of like a utilitarian perspective that they want to like boost the economy versus being like a buddy-buddy thing because like money and politics are usually intertwined?
I think what it is that the government understands that they can't provide everything for the everyday taxpayer. They can't provide affordable housing for everybody. They can't provide gas for everybody and cover everyone's stove and car gasoline. So they're going to partner with business owners who are going to go and drill holes in Texas, and business owners who are going to buy commercial properties and provide affordable housing and create tax incentives because they understand that they can't do it all. And so if you're somebody that has more access to money, you're going to be able to play in this arena of investing into oil and gas, investing into real estate, investing into EV and solar energy, and you get to benefit the most. But if you're lower income, these opportunities you don't even hear about. All you hear about is 401k and possibly buying a home and writing off property taxes and having a child tax credit.
So how do you learn about all of this? Like what certifications do you personally have to get to keep up to date on all of this?
So I have an enrolled agent's license, which is different than a CPA license. A CPA typically goes to school to study accounting. They normally get a bachelor's degree in accounting, and then they go directly into filing tax returns. That's what 99% of all CPAs do. Enrolled agents pass 3 different tests: an individual test, a business test, and an ethics test, which means we primarily study just tax code and consulting around how to leverage the tax code. So when it comes to write-offs and how many deductions you can take or which deductions to take, an enrolled agent is pretty optimized to be able to help you, whereas a CPA may not be able to play in that arena. But when it comes to filing your tax returns or doing bookkeeping and accounting, CPA all day, got your back, and that's the person you want signing on the tax return.
So what if so few people know about these strategies?
Very few people know about tax strategy because the wealthy do not want to share the secrets. It's not until you get into these rooms to where they're starting to tell you what's possible. And this is just from experience of what I've known. I knew that when I was building my wealth, I didn't have access to all the information that I have right now. And it's because people weren't sharing this information at my dollar amount. If you're talking to people that are making $150,000 to $200,000, you might be talking to people that are just taking a home office deduction. You might be talking to people that are just writing off a car or a cell phone. But you start jumping up to people that are making $1 million to $5 million a year, you're seeing different things on their tax returns. You're seeing oil and gas, you're seeing investments, and these things create deductions, and they're also incentives inside of the tax code that the government wants you to do. So the conversations start to change the higher your income increases.
So we've all heard of the trope about the billionaire that pays $0 in taxes. Is there any way that the average person can pay $0 in taxes?
You can pay $0 in taxes if you want to give money away, but most people aren't going to side on that table. They're going to say, hey, how do I keep money inside of my pocket? So the only way that you're going to be able to pay 0% in income taxes is if you have enough deductions or losses that are working against that active forms of income. And for me, I'd rather have a business or rental property that creates those deductions or losses.
Do you ever think it's possible to get rid of the tax code entirely? Just like no taxes. Trump has been talking all the time about like, hey, we just do tariffs.
Yeah.
Come back to tariffs.
Abolish the IRS.
Or just even a flat tax.
Yeah.
I would love just a flat tax across the board. Everyone pays 15%, no matter how much it's 15.
Here in Vegas, it works out beautifully. We just have these casinos, and then the people that come and they visit, they stay, they pay a resort fee, they fund the city of Las Vegas, basically the entire state of Nevada, because they like to go and they like to spin the slot machine, or they like to go put some money on the roulette table. It's so nice as a resident here. Is anything like that possible on a bigger scale in the United States?
I don't believe so at this current juncture. America's in a lot of debt. We believe we collect some of that from tax revenue from our taxpayers. But most importantly, we only have a few states that don't tax us. Most states rely on tax revenue to run. If you're asking me, can we completely abolish federal taxes? That's a conversation I would like to entertain, because originally, the United States was not ran off of taxes. We were ran off of tariffs and excise taxes. We collected things off of goods, tobacco, things like that, alcohol. I would love it if we could have a flat tax, maybe like 15 or 12%, just flat tax across the board. But that's a big stretch. What Trump has done is he is reaching for the stars by saying, let's completely abolish the IRS. But what did we land on? The big, beautiful bill. We landed on him being able to keep his Tax Cuts and Jobs Act that he incorporated in 2017. And now he extended that and made that permanent. Hey, I want to make sure that those tax rates don't jump back up to 39%. We have a 37% federal tax rate. But if we go back to 2017, bro, we were paying 39% in federal taxes. Pretty insane.
To a layman, though, going from 39 to 37, it's kind of just like, I mean, it's not like for all of the talk that people have been doing about cutting taxes, the Republicans are going to slash taxes, and then we go down 2%.
But it's not just that, though. It's every little tax bracket in between.
It's every tax bracket in between. You had 39% go to 37%. You had 35% go to 32%. You had 30% go to 28%. Now we have a 22% tax bracket instead of a 25% tax bracket. We have a 12% instead of a 15%. We have a 10% instead of a 12%. And they extended the tax brackets. So instead of you jumping from the 12% up to the 22%, after you made 150,000 and maybe a 200,000. So he extended your ability to get taxed at a higher rate and lowered the tax rates at the exact same time. But what he also did is he increased deductions across the board, primarily the standard deduction. The standard deduction is a deduction that you're given just if you breathe and make over $12,000, you get to take the standard deduction. In 2017, he increased the standard deduction from $6,000 to $12,000 for single individuals and from $12,000 to $24,000 for married couples. So if you're a married couple, you get a $24,000 deduction back in 2017 as a part of his Tax Cuts and Jobs Act. He also incorporated adjustments for inflation. So now that we're here in 2025, that standard deduction is $31,500. Think about where it was back in 2017. That's for married filing joint. And if you're single, it's $15,750.
So what does the average person stand to gain or lose from the big, beautiful bill?
The average person, and when I say average, I want to make sure that I say that correctly. The median income in the United States is right around $70,000. So the average person is going to see an increase in the amount of wages that they take home every single year because of the big, beautiful bill. The extension of the Tax Cuts and Jobs Act, the increase in the standard deduction, and the increase in the child tax credit. If you have a child, you went from claiming $2,000 to getting a $2,200 credit, and that's a refundable credit, at least up to $1,700.
Does that incentivize people to have a whole bunch of kids? Like, what's to stop someone, hypothetically speaking, from having 10 kids? And now just claiming, is there a limit to how many kids you can have?
No, there's not. You can claim the child tax credit based off of how many children you have, and it's $2,200 per child. And the reason why I like this is because we have seen less people having children here in the United States. And I think Trump has made that very known as his presidential campaign insinuated that he wanted to change tax rates for the child tax credit. When he increased the child tax credit to $2,200, he also came out and said, we need to have more children. He said that. What that means to me is that people that are in the lower to middle income will be receiving more refundable money, which in return makes them want to have more children.
So who benefits the most from this bill on a high level?
The wealthy, absolutely. There's no way around it. The wealthy will benefit the most from the big, beautiful bill.